Do you want to get rich fast? If you could give me 5 minutes, I would tell you that getting rich fast is the fastest way to go broke. Sounds conflicting, right? Let me explain further in this video. Coming up. Alright my friends, welcome back to the Honey Money SG channel. My name is Christopher and today we are going to talk about building financial knowledge, and part of it is starting out your investment. But before you start, you may want to consider these few tips so that you may not make the same mistakes that other people have already taken. So how many of your friends have started investing in the stock market in 2020 during the COVID-19 pandemic and have seen great returns? Well, congratulations, they have taken the risk to invest in the market in the most fearful condition, and it's great that they became greedy when others are fearful. For some of us who are still on the sidelines, not knowing how to start, considering to enter the stock market, here are 4 things you need to sort out before diving into the world of investing. Before we continue, could you help me push the like button so that more people are aware of this knowledge before they even start? This will help push this video to reach out more people. Thank you very much, and let's carry on. Number 1, cut unnecessary expenses. If I were to give a few examples, here are some things that people overpay for: cable TV, phone plan, overpriced coffee, gym memberships, food delivery, cigarettes, annual fees of credit card. How many of these seem familiar to you? The number 1 and the most important thing is really to control your expenses, because if you don't have that self-control with your personal finance, you cannot control yourself in the stock market when you're buying even larger things. So if you could cultivate that habit of tracking down your expenses and knowing what you really need versus what you really want, then you will build up a discipline that can enable you to excel further in the stock market. Number 2, having 6 months worth of emergency savings, because we don't have this job security in this tight labor market and economy situation. So these 6 months of emergency saving will help you cope in the event that you lost your job and you don't have income to pay the bills or feed your family. This emergency will come in handy. And let's say you have a family emergency that you suddenly need to pay a very hefty medical bill. That's where you're going to take out the money from to pay for that bill. So if you don't have this 6 months emergency savings, you will actually make rash decisions from the market. You have to sell off your portfolio so that you could actually pay them, which may not be what you really want when you're starting out investing. Number 3, pay off high interest debts. So this include debts like your credit card and your renovation loan. Credit card is a good tool to help you earn cashback and rewards if you know how to use it wisely. But if you use it on the wrong way, it can quickly chalk up your liabilities and eat up into your savings for paying the late charges, annual fees, and interest charges that may be applied on your card. So you want to make sure that you pay up your credit card on time every month and not missing any single payment. Renovation loan, another high interest loan where young people are not able to fork up that much cash if they want to pay for their renovation on their new flat. My advice to these people would be 2 things. First, work within your budget. If you do not have a high budget, do not overstretch yourself so that you can afford a nicer and fancier house to live in. Living in debt is worse than living in a badly furnished house. Number 2, if you have already set a renovation target, work towards it and save up so that you can achieve that target. Take on some side hustles within your expertise. Help out somebody in need and exchange for cash. Sell some of your second-hand items off Carousell. So these are simple ways to make money that you may not actually realize. Number 4, which is the last point, get protected with insurance. Not just any insurance, but specifically term insurance and your hospital and surgical plan insurance. Term insurance is to help your family cope with the finance burden when you pass away, especially if you are the sole breadwinner and you have spouse and kids to take care of. It will help give a buffer so that your financial situation will not get drastically changed when the breadwinner has passed away. Hospital and surgical plans, enough said. Medical bills are only increasing year on year, and it is only going to get more expensive. There is a saying, you can die in Singapore, but you cannot get sick. That's kind of an extreme statement to say that how high medical bills have been in Singapore. So if you do not have a sufficient H&S plan to cover your medical bills, you will need to keep paying that high amount of medical bills for every treatment that you go through and every night that you stay in a hospital. You won't even have money to invest because all your money is spent on paying up medical bills. Think about it, just one illness or one accident alone can wipe out your entire savings if you do not have a H&S plan. What about other insurance like critical illness insurance, disability insurance, and even whole life plans? Personally, I feel that those are good to have when you are in a better financial position, but you must first settle these 2 fundamental insurances before you get started up with any other kind of insurance. So I covered the 4 points. These 4 actions help to build up your foundation for investing. If your foundation is not even solid, you will make decisions based on your emotion, and being emotion driven is not a good trait in the stock market, because when the market goes up 10%, you feel like selling your stocks to capture your gain, and when the stock market goes down, you feel like selling to reduce your losses. Now, stock market is not like a gambling machine. You need time for the business to actually grow and improve their earnings quarter on quarter, year on year. And good businesses can stand through the test of time and deliver good earnings to its shareholders. So if you do not even have the emotion to hold your stocks during a downturn, your returns will never be above the market, and you are better off not investing because you'll buy high and sell low. Let me tell you a fact. When the stock price is increasing, it's like taking the stairs up. It takes months and months to actually build out that stock price over good fundamentals and good results. And when stock price falls, it's like jumping off the building. It just takes a few days for it to plummet like 10-20% over a piece of bad news or bad financial results. So in your journey of investing, you need to get used to this kind of fluctuations, and these kind of fluctuations will play with your emotion and your mind. I cannot stress this enough. If you don't even have the solid foundation to start out your investing journey, you will be played up by your emotions and you'll sell off all your stock holdings in fear. Because you have more important things that you need to spend money on. You need to pay your unnecessary expenses, hospital bills, credit card debts. Can you imagine that you don't even have money for your daily life? Don't even need to talk about investing. Okay, wrapping up. So takeaway here. Protect your downside first and the upside will take care of itself. Build up your solid foundation so that you can really focus on what you want in the stock market. And you don't need to sell out your stock holdings in fear because you believe that the company would do well in the long term. For people who have not started investing, tell me in the comment section below, have you achieved these 4 steps? And if you have, then tell me more about why have you not started yet. As usual, if you like the content today because it is relevant to you, share it to your family and tell them to like this video. Remember to subscribe to the channel so that you will not miss my future content. Thank you and have a great day ahead. I'll see you guys on the next one.